Hey guys, welcome back to Financial Professional. Today, we'll explain to you what DeFi is. Let's head into it. Decentralized finance. One area that attracts great attention in cryptocurrencies is DeFi, or decentralized finance. This refers to smart contract financial services, which are automated enforceable agreements that don't need intermediaries, such as a bank or lawyer, and instead use blockchain online technology. This had led to a massive increase in the value of all the tradable tokens used for DeFi smart contracts.
Digital smart contracts enable you to exchange in a transparent way. Smart contracts receive and redistribute digital assets.
Numerous tokens, and some significantly more, have increased in value 3 or 4 times a year. Synthetic's network token, for example, has increased more than 20-fold, and Aave has increased almost 200-fold. DeFi, which is mostly based on the Ethereum blockchain network, is the next step in the Bitcoin revolution and disrupted financial technology that started 12 years ago.
Ethereum is the biggest smart contract platform out there.
Cryptocurrency trading on decentralized exchanges, such as Uniswap, is one area in which these decentralized applications have taken off. These are entirely peer-to-peer, without the platform being supplied by any company or other institution. DeFi is sometimes referred to as Lego money, as the apps can be stacked together to maximize their returns. For instance, you can buy a stablecoin, such as a DAI, and then lend it to Compound, all using your smartphone to earn interest. Although many DApps today are niche, future applications can have a major impact on daily life. For instance, under a mortgage agreement, you will likely be able to buy a piece of land or house on a DeFi platform, whereby you repay the price over a period of years. The deeds would be put up as a collateral in tokenized form on a blockchain ledger, and the deeds would automatically shift to the lender in the event that you defaulted on your repayments. Because it would not require any lawyers or banks, it could make the entire process of buying and selling houses cheaper. Why the craze? First, regulators have been behind the curve, and in this vacuum, DeFi has been able to flourish. For instance, there is a legal requirement in traditional unsecured lending that lenders and borrowers know the identities of each other, and that the lender evaluates the ability of the borrower to repay the debt. There are no such requirements on DeFi. Instead, it's all about mutual trust and privacy preservation. The delicate balance between stifling innovation and failure to protect society from risks such as people putting their money in an unregulated space, or banks and other financial institutions potentially unable to make a living as intermediaries, must be weighed by regulators. But embracing change seems more sensible, and that seems to be happening. In July, by approving the Ethereum-based fund, ARCA, for the first time, the US Securities and Exchange Commission, or SEC, made a major shift towards embracing DeFi. This is welcome and significant, since the hostile environment created by archaic regulations written for a bygone era is one of the major challenges to financial innovation. This has caused some DeFi projects to fail, including major ones such as the New Jersey-based Base, which in 2018 returned $133 million to investors when it concluded that it couldn't operate under the SEC rules. A second explanation for the DeFi surge is that mainstream players are engaged. Several high-street financial institutions are starting to accept DeFi and are looking for ways to get involved.
PayPal and Jack Dorsey talk about it, but I mean, Bank of New York Mellon is the largest custodial bank in the world. Eventually, they're going to treat it like any other asset.
For instance, as part of the Interbank Information Network, spearheaded by JP Morgan, ANZ, and Royal Bank of Canada, 75 of the world's major banks are testing blockchain technology to speed up payments. Major funds for asset management are beginning to take DeFi seriously as well. Grayscale, the largest crypto investment fund in the world, is more prominent. It managed more than $5.2 billion in crypto assets in the first half of 2020, including $4.4 billion in Bitcoin assets. Third is COVID-19's effect. Global interest rates were driven even lower by the pandemic. Some jurisdictions are now in negative territory, such as the Eurozone, and others could potentially follow, such as the US and the UK. DeFi potentially offers savers much higher returns than high street institutions in this environment. Compound, for example, offered an annualized interest rate of 6.75% for those saving with stablecoin Tether. You not only get interest, you also get comp tokens, which is an added appeal. First 2/3 of people in possession of a smartphone without bank accounts, DeFi also has the potential to open up financing for them.
That operates without any central authority and is highly accessible to everyone around the world with just a smartphone or internet connection.
One final significant reason for the rise in people putting money into DeFi tokens is to prevent their explosive growth from being left out. In practical terms, many tokens are worth nothing or close to nothing, so we see a great deal of irrational exuberance. But we are heading towards a new financial system that is more liberalized and decentralized than before, whether we like it or not. The central question is how best to guide its growth with controls and balances that minimize the risks and as widely as possible spread the potential benefits. For the next few years, that's the challenge. What do you think about about decentralized finance? Do you think that it's revolutionary? Let us know in the comment section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.